Hey traders, welcome back to another video. Today we're talking about my approach to technical analysis, how I mark up the charts, how I find my entries and exits, and how I manage my trades once I'm in them. Now, I'm gonna just give you a couple quick disclaimers about my strategy before we get into the logistical stuff. My strategy on a technical perspective is some of the most basic textbook stuff. You probably already know everything I'm about to go through, and it's so simple that it might even trigger or upset people at how simplistic it is, because there's no fanciness, there's no, secrets, there's no magical formulas here. I am using basic market structure and price action, as well as support and resistance, to gauge when I buy and sell things. Now, I should also make another disclaimer. I don't claim my stuff is the most amazing, game-changing, groundbreaking stuff. I actually think that for me and for many traders that I know who are, actually profitable and have shown broker statements like I've done on my channel, I don't say that to brag. I show you that to not waste your time. I've showed you guys my broker statements. We'll pop up a picture on the screen. I mean, this is a couple years of track record of data that I've shared, logged in publicly. I'm telling you that to tell you that simple can work, and don't let the whole world tell you, don't trade like a retail trader. Well, I'm walking proof that you can use some of that simple textbook stuff, and it's not all nonsense. It can be very, very powerful stuff.
He is the chosen one.
With that out of the way, let me also make another disclaimer. 75% plus of my actual edge per se does not come from chart markups. My edge mostly comes from a combination of these three things: FA, SA, and TA. Okay. What do these stand for? Technical analysis is what we're talking about in this video, but most of what I do, the 75%, comes from sentiment analysis and fundamental analysis. What are these two things? This is looking like at economic data, what the Federal Reserve is likely to do next, how the consumer is holding in, how jobs data is looking. This is where the majority of where I would say my edge in the market comes from. This, in combination with a really rigid risk management plan, that's where most of the edge comes from right up front. I don't want to waste your time. If you're looking for fancy technicals, you can click off this video now. Most of my edge comes from the fundamentals and sentiment, also considering what market participants are looking into, what the commitment of traders data is showing us, what surveys are showing us, getting a read for how consumers are feeling, as well as getting a read for what institutional money is doing or what the crowd might be stuck in, or are they stuck in a short squeeze. I will just give a disclaimer to this video. Majority of what my actual trading decisions come from these two things. A minority, which we're going to be talking about in this video, is the technical side. How do I mark up a chart? And what do I use technical analysis for? So these two things, FA and SA, fundamental analysis and sentiment analysis, guide my directional bias, whether I'm bullish or bearish on a particular chart. But the technical analysis still plays a key role. Now that hopefully if you're still with me and I haven't scared you off now, I'm not saying technical analysis is useless. In fact, I use it and it still makes up 25% of my overall trading strategy. Technical analysis, however, is far more suited for me for the red lights and green lights, the stop lights, the go lights, entries, and the exits, and the trade management. It still plays a key role in what I do for my momentum-based trading style that I talk about regularly on YouTube. So in this video, we're going to talk about how I mark up the charts, how I manage trades that I'm in using simple textbook technical analysis. Again, nothing fancy. Most of this stuff you probably know all about. With that said, let's jump into it. So, and I'll also just say, if you'd like to, you can pause and open up this other video. If you want to get more into the fundamental analysis side, I'll share my full trading strategy video that I did in the top right hand of the screen right now. This includes the technicals, the fundamentals, and the sentiment. But now we're going to narrow our scope really to talk about the technical analysis side of my trading strategy. So when I say simple technical analysis, I'm talking about very straightforward price action, market structure. We'll put MS for market structure, price action. I'm looking for higher highs, higher lows, or the good old fashioned lower highs, lower lows, right? This is your simple trend, marking up of charts. So when I'm looking at this chart of gold right now that I've got pulled up, what we can see here is higher lows and higher highs, higher lows, higher highs, right? Higher lows, and then we're starting to potentially turn back the other way right now. Now, once I have that, there's another key thing I want to just start off with. I'm looking for the simple technicals. I'm looking for support and resistance, market structure, trend direction. I also typically find myself personally spending most of my time on the 4-hour and the daily chart. I'm mostly a swing trader. That doesn't mean that you can't trade lower time frames. And of course, this video is what I do in the markets. It's not the only way to do it. This is what I do. I typically find myself on the daily chart and the 4-hour chart. I find these things are more compatible with my fundamental analysis approach, but I also find the technical charts to be much cleaner on the higher time frames than on the lower time frames. I think the lower time frame you get more noise, you get more whipsaws, you get more, dare I say, market manipulation, that sort of thing, if you want to go down that path. Really, I just think there's more clarity, more cleanliness on the higher time frame charts. Also, really quick, I just wanted to mention that if you're not already inside of our Telegram channel, we have free value being posted there between myself, Frank, and our team who runs the Telegram. We're posting free value for traders every single day. So make sure to tap in. The link will be down below in the description. So I've got a chart here of the S&P 500, and I'm going to just go ahead and wipe it clean. And I'm going to just show you how I would mark this chart up from a support and resistance perspective. And first, I'm just going to show you a classic example of an upward trend. So when this market is just trending higher, what I am looking for is, again, the textbook simple stuff. I'm looking for the most obvious places on the chart that we probably all can see in terms of key levels that were important to this market. So for example, we can see that this level was a level of resistance. You had a couple different points where the market rejected this general area. And again, I do use zones rather than lines just because I think the market has, there's people trading on the lower time frames, there's people trading the higher time frames, there's institutions that have to build positions gradually. My point with it is support and resistance, in my view, is more of a zone than a strict technical specific price level, simply because, again, the biggest money moves in the market are gradual because, if you're an institution buying or selling a zone, you have to do so in bits and pieces. So perfect price points is not really practical, especially when you also have people trading on different time frames, etc. So I'm looking for key, simple examples of zones on the chart where that most traders are going to be able to see. So we can clearly see this little, support here that broke and then that sort of thing. And then I'm looking for, here's an area where you can clearly see just multiple touch points. I'm looking for, again, really obvious touch points that all traders can see. Now you might say, well, Nick, do you trade manipulation? Are you waiting for this level to break a little bit and then you're looking to buy people's stop losses and get all fancy with it? And my answer is absolutely not. No, support is support, resistance is resistance until proven otherwise. If you want to get more fancy than that, by all means, do you. But if you think that there's a magic to just buying below where all the stop losses potentially are, to me, I find that to be a waste of time. A support level, if is in a strong enough uptrend, should just hold like a bull on parade, right? If something's really support, it should just nail the bid and push off of that level. So anyways, I don't really trade any sort of, liquidity grabs or anything like that. That's just not, to me, necessary for my own trading style. Again, I'm using the most basic support and resistance that you've seen 100 million times. I think there's validity to just keeping it really simple. I'm looking for key levels, resistance, broke out, and I'm looking for break and retest entries. The simplest stuff, again, in the entire textbook. So from a technical perspective, I keep it as simple as I possibly can on the charts. I'm looking for, again, key levels of resistance in an uptrend being broken out on strong pushes and then looking to buy those retests. And then I'm looking to, and again, repeat that process. I'm looking to trade in the direction of an upward trend. How do I define an uptrend? Well, again, my technical approach, I'm going to give you a disclaimer here. Here's another disclaimer. There is a level of discretion in, a lot of trading, but in my technical analysis, there is a good bit of discretion. A support zone has to just kind of meet the eye. I'm looking to, I've spent so many countless hours in the chart. I think that generally speaking, I'm able to spot a zone pretty well just from all my chart time. It doesn't mean I'm, perfect or anything like that, but I'm generally looking for, eye capturing levels of support and resistance. There's not a hard coded formula for how I define a support level, though I will give you a quick little example of something that I like to do. So if I go in here and I just add a RSI, I love doing this. So if you struggle with finding good hard levels of support, try this out. This is probably a cool little tip you could try out. So let's just say we're just going to take off a bunch of the noise here for a second, and I'm just going to let's just take off the oversold. Let's do this. We'll keep the oversold. We'll just remove the background. Okay. So I just did a 4 RSI. One thing that you can try doing if you struggle with finding, obvious zones is, first of all, just train your eye, practice. Again, that's one of the best ways, is just to mark up your chart and then cross-examine with other traders in your chat rooms or on YouTube or something, and just see if you're coming up with the same zones. That's one of the fastest ways to just get better at drawing support and resistance, keeping it really simple. Another way is to grab the 4-period RSI or the 7-period RSI and basically look for oversold kind of turnaround points. And oftentimes when you get these quick turnaround points, they produce very clear levels of, turn points in the market. The lower you want to put the RSI pretty low so that you can get some pretty clear, quick moving RSI, just to give you an idea of where, this market might be, turning on a dime. I'm looking for V-shaped kinds of moves. And I've said this before, I'm looking for V-shaped types of turns in the market. And again, the more sensitive you make this, you can even go down to like a 2 or a 3. You're literally just looking for sharp turns in the market. And that's just another tip you can do if you struggle with finding support and resistance zones that I recommend. So anyways, now that we have a clear upward trend, basically what I'm looking for is when you have these key levels, I'm looking for each time it retests it to find support pretty quick. Now, in terms of a reversal of that trend, what we can do here is we can say, well, basically this pattern of upward trendingness, right, should be able to pretty quickly, come back to an area 1 or 2 times, hold that area, generally speaking, that's fine. But if you start getting a big, strong candle breaking through key levels of support, that's where there's an issue. And again, what I mean by that is, generally speaking, I'm looking for the trajectory that the market is trading in to keep going like that. So, you can draw just a trend line here as an example. Trend lines are not something that are like critical to my technical strategy, but you can draw simple technical trend lines just to get an idea of, the current trajectory. I'm looking for this market to basically come back. It's fine to retest areas of support, but I'm looking for them to hold pretty aggressively. Again, this is all assuming that the fundamental bias that I have for a particular chart is still intact. If the fundamentals change, it doesn't matter what the technicals look like to me. Fundamentals are first, they matter the most. It's what drives the markets the most, right? If NFP comes out, it doesn't matter all your chart markups that you've done. NFP will be more important if jobs data comes out real strong or real weak and just changes the overall fundamental story. That being said, what about a reversal? Well, for a reversal, again, it's the same concept. I'm looking for, now that support has broken, I'm looking for, those same areas of support to potentially act as resistance. So as we speak, a current chart on the S&P 500, it's looking like we've now formed a potential short-term reversal to the downside. Now, if this breaks clean through this level tomorrow, speaking of NFP, literally is NFP. I don't know what is going to happen with the jobs data, but let's just say, the market freaks out and we see a big break to the upside, then we may start potentially forming a new upward trend. So I'm just looking to basically trade in the direction of what market structure is looking like, predominantly off the daily chart and the 4-hour chart, as I mentioned. So a lot of times I get the question, Nick, do you wait for confirmations when you're taking your trades? And the answer to that is no. I don't really look for confirmations. I just really simply, the confirmations for me, again, are the big trio, right? confirmation enough. It doesn't come from the technicals, right? As much as it comes from the combination of the fundamentals and the sentiment analysis as well as the technicals, right? I'm looking for the combination. So I'm not going to wait for a particular candlestick pattern to form or anything magical like that. A zone is a zone for me. And, if I'm gonna, let's say I'm just bearish on the S&P 500 and this market came back to what was support, broke through that, and let's just say that I think the fundamentals have shifted and now things look kind of bearish. Well, fundamentally, maybe I take that short right at that level. I'm not waiting for a candlestick. I'm not waiting for a pin bar. I'm not saying that that is wrong to do. And I want to add, it doesn't hurt if I see those things. I'm very well aware of what a pin bar candle tells you about the market. It's, you had a big push and the market, couldn't hold it, fell back down. That's not a perfect indicator of what the market's going to do next, but it doesn't hurt to see confirmations like that. It's just what I'm telling you is I don't need to see that in order to execute a position. For me, the confirmation I get enough is simply my fundamental and sentiment analysis that I've done beforehand. And the technicals, the entries, are simply just going to be zones, right? I'm just going to use those zones, higher highs, higher lows for uptrend buys, and lower highs and lower lows for downtrends, for sells or shorts. So again, not looking for any sort of confirmation candle. I'm not looking for, 5 confluences on the technical side. I'm really just keeping it simple. Market structure plus support and resistance zones for entries and for exits. Now we can move on to arguably the more exciting part. Let's say I'm in a good trend. How do I use technicals to actually, manage the position? Now, quickly before I get into this, I also want to mention that sometimes you'll see on my charts that I do use trend lines or that I add Fibonacci retracements into some of my chart markups. And I just want to add, this is like the seasoning to, making a good steak. Right? The good steak for me is, again, going back to the big 3. To make a good steak for me, it's mostly going to be these things, right? This is a good cut of meat, that sort of thing. And then the seasonings are going to be your trend lines, your Fibonacci retracements, that sort of thing. But the core is just simple market structure, supply and demand through support and resistance, right? Again, really simple stuff. And it works for me. So I'm telling you what I'm doing here. And again, I'm not trying to pat myself on the back, but I'm telling you, if you're having doubts about what I'm saying, I've shown you my broker statements for the last 4 years. I'm not here blowing smoke. I'm not making this stuff up. Yes, there's some discretion, which I know kind of scares people off. People are saying you don't have hard set rules for your technicals. But again, I think you can be pretty amateur at technicals and still make money if you're good at fundamentals and sentiment. That's my opinion. I really don't think technicals are nearly as important as people make them out to be. So let's keep pushing on. How do we manage a trade? So, once I'm in a trade, let's just say, for example, I don't have a short position on the S&P 500, but I do have one on the Russell. And this Russell, this might age poorly, but I'll show you a trade that I'm currently in with the Russell. Again, by the time you see this video, this trade will either have been long gone and trailed out, or the market would have, moved, and I'll show you how I would manage in that situation a winning trade. The other thing I'll mention really quick is that some simple kind of stop loss placement for me. Let's talk about the stop loss. The stop loss is really important. I place stop losses on all of my momentum-based trading trades. Now, I do have other trading strategies that do not use a stop loss. Instead, I use options to hedge. There's other styles of trading that I do, but we're talking specifically today about the simple technicals that I use for my momentum-based trading strategy that I talk most frequently about on YouTube. Let's talk about the stop loss for a second. For me, I'm looking for a zone to hold, and if it doesn't hold, I got to get out of there. Now, I might use a couple zones. Here is a live example of a trade that I'm in myself right now on the Russell. What I've got here is we're retesting a key level of structure, and there's also structure here. So what I've done is I've given my stop loss some room here, but it's still relatively tight. In the big picture here, again, I've got a trend line drawn. I've got this, lower highs, lower lows concept, lower highs coming into this market. But basically, I want that to stay the case. I don't mind if we retest a structure point here. I don't mind if we, come back up into this zone a few more times. I'll still hold the trade. I'm happy to hold through consolidation as long as we don't nullify the idea that this is an area where we should still see sellers. If tomorrow this market rips through the highs, I was wrong. I may still like the trade short side, but I was early to the entry. And in that case, I will take a loss. One thing about me and my trading style that I think that I'm pretty good at in terms of experience is I'm pretty good at taking the L. I'm pretty good at stopping out quickly and taking losses because I accept that with my trading style, and we're going to talk about how I manage winners in just a moment, I accept that my strategy generally has a bit of a higher lose rate than win rate. I lose more trades than I win. It's just that my losers are typically pretty small. Now, let me show you this. So my stop loss is relatively tight. So if this market rips through the highs here, breaks through this level of structure that I've marked up on my chart, and my idea has been kind of rejected by the market, then I will move quickly to take a loss and push on. Now, I also will say this, although I might take a loss on this trade if it rips higher, I also will oftentimes take more than one attempt to get into a good trade. So let me show you a quick example of a gold trade before I come back to this Russell. So I'm gonna go to gold, this gold chart here for a moment. Some of you guys might remember from my channel when I went long gold and I ended up making a profit of nearly $19,000. In fact, here's a real quick clip of that trade right around when I closed out. Well, think about what is gold shooting up massively over and over and over tell us? It tells us investors might be a little bit concerned about something going on in the world, perhaps geopolitics, perhaps central banks and economic slowdown kind of all coming together, right? Central banks cutting interest rates around the world. Perhaps they see a slowdown in the economy coming. Regardless of exactly why, the point is gold is shooting up. And when gold is going up like a straight line like this, it is a concern for investors. And I'll show you my current positions here. So if I just zoom up here, this is my gold and oil trades, which are just massive trades for me. I wish all my trades looked like this. So before I got into that trade, I took a couple different entries trying to get long on gold. And my point with saying that is oftentimes, in order to catch these massive movers, I accept that you're not going to be able to catch these kind of moves very frequently. Oftentimes, you're going to get into a trade and it's going to pull back a little further than you thought, and then you're going to try again to get in long, and then it's going to stop you out, and then finally you get the move and it rips. I accept with my trading style that I have a relatively lower win rate because I do what is called, or in my own expression, what I call the true trend following approach. And what I mean by that is that my trailing stop method is essentially, I want winners to run like the wind if I catch a good one. So what I mean by that is I trail stops. You'll notice that on this trade, I don't have a strict take profit. Many traders, what they will do is they'll put a target at a recent level of structure. Or maybe they'll take some partials here and then they'll take some partials here, and maybe they'll even let a little bit more run. For me, I am all in and I am all out. So what that means is that I take my position, I may add to a position, but for the most part, I am into my trade and I'm out of my trade when I either get stopped out. Well, actually, every time I exit a trade, it's when I get stopped out. Now that stop loss might be in profit, which is what we'll talk about now. Also, real quick, I should mention, if you're looking to trade directly on TradingView with the broker that I'm using, or if you're not in the US and you're looking to trade directly on TradingView, a couple key brokers will be linked down below in the description. Just a heads up, these are, full disclaimer, these are referral links, and if you choose to use them, you'll be supporting my channel, but you can trade directly on TradingView, and some of them have like sign up perks and bonuses for you, so get that free money. Again, it's in the description below. Let's say that this trade rocks in the next couple weeks. Let's say that it drops like a rock here and we start taking out supportive levels and we start, really making a move. What I will do as this market potentially drops is I'll take this stop loss and I will bring it into profit as we start taking out those key levels of support. So if we take out this support level, I may start to trail my stop here. And then if we take out this support level on this big move lower, I may trail my stop here and just lock in profit. Because what I love about this is that if you think about it, my risk is defined. You know, let's say that this is a $1,000 loss potentially for me, which is a lot of money, but my account has grown over the years and $1,000 is still relatively small to the account now. So if I risk $1,000 and the trade goes against me, I lose $1,000. No big deal. Again, not to disclaim that is a big amount of money and I'm not trying to sound like a hot shot, but over the years, my trading account has grown substantially to the point that this is still a small portion of the account. That being said, if this market potentially goes much, much lower, this is how I'm able to catch the plus potentially infinity upside. This is why I love trailing stops, because every once in a while, a lot of times I get it wrong, but every once in a while I get it right. I get it really, really right. And that's how I make the most of my money. Most of my money from the markets has come from a select few storytelling trades. I can remember all of my storytelling trades over the years. I had a big trade on the S&P 500, the dollar yen, the euro dollar short that I took on my honeymoon, the NASDAQ trades, the gold trade of 2024. I can tell you about all the big crazy winners that just basically did this and they just kept going and going and going. And then when I thought they started getting tired, they kept going and they kept going. So my point is, the big winners for me are oftentimes the massive market runners that shock everyone, including myself. But I trail stops and I hold on for dear life. And that has been a big success for me, because you're looking for, again, the fundamental story is what helps me find those opportunities. That's the secret. The quote unquote holy grail or secret for me is just understanding fundamentals, because 99% of traders do not want to take the time to learn all of that data. What does GDP numbers mean? And, you know, how is the Fed going to react to a hot inflation print? And, you know, where is inflation trending? And how does that impact gold? And how does it impact the indices? Again, that's where all the big money for me has come over the years, has been understanding the fundamentals and employing a simple technical approach. Don't overthink the technicals. If anything, overthink on fundamentals. Think real hard, get real good at fundamentals, and just keep your technicals real simple. That's, you know, me telling you my experience here. The money I've made, I can tell you, is not coming from beautiful chart markups. The money that I've made is coming from the fundamentals and just a simple but strategic trade management approach using technical analysis. Again, I lose a lot of trades. My charts are not perfect, and I don't claim to have sniper trades every single week. But with good fundamental analysis and understanding where the market direction generally is, I can then use a simple technical approach to maximize my potential return in the markets while minimizing my potential risk. If this video has been helpful to you in any way, shape, or form, do me a quick favor and hit that thumbs up button. It really does help just to get this message out and share this more. Again, I'm trying to keep it as real as I possibly can with my videos. No nonsense, no hype, no Lamborghinis, nothing like that. And if you're down for that, if you're looking to continue to improve as a trader and this video has been helpful to you in any way, again, hit that thumbs up button and subscribe for more content. We'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.